The conversation, the debate between inflation versus deflation continues to pick up speed. We have one side of the camp kind of going along with what the Federal Reserve is saying that it's transitory in nature. This will only be temporary. Then we have the other side of the camp saying, look at the supply chain issues, look at the prices of commodities, inflation is here and it's not going anywhere anytime soon. So we're going to be taking a look in this video at both sides of the camp, some of the main players in each side and what they're saying. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, huge favor, huge ask. If you learn something new or you get some value out of the video, hit that like button for me. It would definitely help me out and I would appreciate it. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on. We had some huge news. CNBC, I turned on the TV on Friday. James Bullard, president of the St. Louis Fed, was talking about where the inflation rate or where the interest rates should be going. Now, let's look at this Wall Street Journal article. It'll touch a little bit further as to what he was talking about. And he wants a rate increase in 2022. This is definitely a lot further. And if we look back at previous, experiences that we've had where the interest rate has gone higher, especially December 2018, the market started to come down. In turn, what did we see before open on Friday? Well, chaos was started. Not to be complicated any further, but it was a quad witching day. If you're not familiar with what that is, I'll link the video that I did on that. Basically, a lot of expiration in futures contracts and options, and it's basically a very volatile day. So with that being said, he goes on CNBC, he's talking with Becky and Andrew, and he's saying, I put us starting in late 2022 with the interest rate increases. Now, interest rate increases are one of the ways that the Fed can use to kind of halt inflation or slow down inflation. So James Bullard is in the camp that he sees inflation in the market. Now, just to make a side note, inflation is not bad. What we're talking about now is what the Fed can do to protect against a hyperinflation where it gets a little bit out of control. They need to start talking and acting, and James is saying here that if they do not do it by late 2022, they could lose control, and we don't want them to lose control. But again, going back to my original point is that the economic outlook is stronger than what was expected, meaning that inflation is not bad. It's very good for the economy. Obviously, it takes away your buying power, but this is something that is needed in a strong economy and something we haven't had really since probably 2010. We went through a transitory period of inflation, but it's something that really hasn't been around since the modern monetary theory and printing of money. So it is important to note that he doesn't have a vote on the FOMC, so he doesn't have a say in the Federal Reserve vote, and that basically means that his viewpoints are probably rare across what's happening in the Federal Reserve. They came out, said it was transitory this week. Inflation is higher than expected, but nothing to worry about as of yet. They have started talking about tapering, meaning not printing as much money, but obviously not much further discussion or idea of what's going on there. They did bring up something called a dot plot. This is where all the presidents kind of give an indication as to where they would like to see an increase in interest rates or if they should keep it low. And I will show you an example of that right now. So this is the dot plot here on the screen. You can see the yellow dots are the presidents or people that have a voting members are where they're projecting the interest rate should be. You do start to see the basis point increase in 2022. You also see, 50%, half a percent increase in 2022, and then obviously 2023. And you have the expectations longer term being around the 2.5 to 2 to 3% up here in the longer term projections. Now, what James also mentioned in the CNBC interview is that this dot plot does not give an indication as to what quarter you want to see the rates increase. So it is important to note that, some of these dots may be Q1 2022, Q2. He did mention and clarify that Q4 was the date that he wants, 2022, that he wants to start increasing. But going back to the original part here, we did see Neil Kashkari come out, who is the president of the Minneapolis Fed. He came out and said he doesn't want to raise interest rates till 2023. So you're starting to see the divided camps within the Federal Reserve alone. So he definitely doesn't want to cause panic, which James had caused a little bit of panic. The Dow was down 200 or 300% to begin with. So that is definitely something that the taper discussion, the interest rate discussion, that will cause temporary or in the short term a little bit of volatility in the market. And obviously, we've talked about it before, there are companies that are succeeding, there are companies that are benefiting in this type of economy. So if there are weakness in those names, FANG, which I've mentioned before, they did not suffer too much on Friday. But moving on, we'll look at David Rosenberg, a Canadian researcher, been in the market for a very long time, known for being a bearish on the economy over the last 10, 15 years, obviously with all the printing, credit, debt, everything in that regard. He's always known for taking the flip side of the market. He's basically coming out and saying that he thinks the market is going to have a deflationary pressure on it, meaning that it could potentially go down, saying that we will be talking about disinflation and deflation by the end of the year. Obviously, reiterating what I spoke before, 35-year career. He always takes like the unpopular position. That's kind of his thing. But he goes on to say that the CPI figures for May come out this Wednesday, north of 3%, which is probably the highest inflation rate that we've seen in 10 years or so, like the transitory thing that I talked about before. And it's being driven by these supply chain bottlenecks. I know we've talked about it multiple times, but as we continue to buy things for our home, spend on backyards or renovating our house, we buy these things from China. Obviously, raw materials, it's also affecting shipping. Can't get space on the ships. There's delays at Long Beach. There's supply chain constraints with raw materials in China. Can't get space on the vessels. There's so many different factors right now, but definitely Rosenberg thinks that the transitory nature can be explained. The commodities have shot up, the lumbers, the coppers, the everything like that, but we've seen them start to come down so far. So basically the supply side needs some time to respond, but it will be in the second half of the year, which is about the same time the government stimulus measures begin to fade and the heat comes off demand. So much demand right now for us buying things for our home. COVID slowing down things to produce lumber. We start to see supply of lumber come back up. The prices has since come down. So the pulls between supply and demand will come into equilibrium or equate at the end of this year. So he definitely sees that coming off, which is awesome. But we'll go on to another article that I found on the Global Mail, and this is 100% the worst thing we've ever seen. Canadian companies are adjusting to supply chain chaos. We have here a company that brings in product from Asia. They have their own manufacturing facilities overseas, and they're seeing the prices of steel, wood, propylene, whatever that word is, my apologies, continue to increase. The prices of shipping are also increasing. The problem is we can't make any money because we can't raise prices quickly enough. We have record sales, but the lowest profits I've ever seen. And it's depressing because we're working harder than ever. So this kind of goes into the fact that, okay, we have David Rosenberg saying that these pressures will come off with the commodity pricing and then in turn in the shipping prices. But if this continues to move forward and this continues to be a problem, which I probably think is going to happen until Chinese New Year 2022, that February period, if these prices continue to stay high, they're going to push these prices onto the consumer. That is going to create this inflation. If the demand continues to go, if the economy continues to rise, inflation can be a problem moving forward and takes away from Rosenberg's deflationary pressure conversation. So these companies are having lower margins. This could basically consumer staples, we've talked about it in How to Profit from Inflation, will push the prices to the consumer. The consumer will have to pay more. These inflationary pressures could continue. Now, we do have another article here written by James McIntosh on the Wall Street Journal. And Tesla and other bubble stocks have deflated just like 2000. We've talked about it before. Helicopter money, the printing of the government, it has created sectors to overheat: clean energy, electric cars, SPACs, cannabis, crypto. All of these have kind of fallen off since their meteoric rises from March 2020, and it started kind of around the January period to fall off. And basically what he's saying here is that we will see deflationary pressure in sectors that have run a little bit hot. And obviously that's, we've seen the trade switch from growth to value. November 2020, we saw all of these people start to, institutions, retail, start to move towards the value stocks of it. But basically what he's saying here is that there's a lot of similarities to what we saw in the tech boom in 2000. So we had the NASDAQ absolutely overheat, panic selling came, and the S&P actually did not too bad. If you look at it today in comparison, it's almost as expensive as it was then, trading at 21.2 times forward earnings, and then it's 22.6 back in 2000. So it's roughly around the same piece that it was there. So there is a potential for a potential, downdraft in stocks in the next couple months. We also saw Michael Burry come out with some heat this past week, saying that this is going to be the mother of all crashes. Obviously, we know him from The Big Short. We've talked about him in a previous video about deflation as well. So I'll link that above if you want to go back and look at that. What James finishes off the article talking about is that there are other threats to both the economy and stocks, of course, but I'm hopeful that the dot-com repeat of the past 9 months will be no more than the other mini bubbles that appeared to be and vanished since the 2009 bull market, albeit the others. So with that being said, we see, James Bullard of the Fed coming out and saying inflation is real, inflation is here. Let's start putting these measures into place with raising the interest rates to nip the problem in the butt early. You have the Michael Burrys, the David Rosenbergs, the Kathy Woods, who also covered that before, who are saying that this is just transitory. This is just the next 6 to 12 to 18 months. It'll be over. It'll be past. For me, I still say pick good companies that are making money, hand over fist. That is my opinion. But let me know down below what you are thinking is happening in the market. Is it inflation? Is it deflation? I'd love to hear your thoughts, but I hope you enjoyed the video. I hope you got some value out of the content. If you're still here with me, hit that like button. I would definitely appreciate that. And if you haven't already, please consider hitting that subscribe button. I hope you all have a great week in the markets. Happy trading.